Joining us now, Dewey, Steffen, CEO and Chief Investment Officer of Great Lakes Wealth. Dewey, good morning. How you doing today?
Hey, Dave, good morning. It's great to see you.
Well, good to see you. Thank you very much for joining us. So, Dewey, first of all, I got to check out your podcast. I've not done that. We'll make sure we give that a plug before we head off. Dewey, I get so much email. You probably do too. And lately, especially as the economy has been a little bit disrupted, I get all of these like emails that says you must do this immediately or your life will be ruined. The most ominous things that are just like required actions that we have to do. I understand that somebody's marketing pitch, but can you just start out today by telling us what to watch out for? I mean, some of these things, they're scary, and you get them, and then you go, well, boy, I better do that right away. And it may not be the right thing to do. Does that make sense to you?
Yeah, it absolutely does. When you're marketing, fear sells and panic sells. And, euphoria can also sell. Panic can be panic of missing out or panic of not doing something that can be devastating. And these are very much uncertain times in terms of, opportunities that are there, but also worries to have. And so specifically to doomsday scenarios or opportunities that may, be lost, those are all, individual and specific. But in general, there are absolutely some things that all investors should do, whether that's before year end or just in general to invest for success.
All right, so let's start with the simple things before we get into the scenarios. Let's talk about the year end. That's a really good place to start. What would Dewey do right now with the calendar saying Thanksgiving and almost December 31st?
Well, thank you for the plug of the podcast. Again, we have a wealth management firm here in Oakland County, and it's called Great Lakes Wealth. And then we have a podcast that we started during the pandemic to help our community not just survive, but thrive. And a play on my name, Dewey, of What Do We Do? So we do have over 1.5 million views on social media, Dave.
Nice.
So we're very proud of that. Yes, and so we're on YouTube, and it's on Spotify, and it's on Apple iTunes, and so on there we have guests in the community, and we have people that always say what they would do, not just what do we do. So that was a quick plug for the podcast, but it relates to investment planning around the Thanksgiving time and the holidays coming up. The very first one would be just to make sure you've maxed out your retirement plan at work and put all the money away that you can either get deferred from income tax and or just make sure you're hitting the investment limits, especially if your employer's match.
And I got to say, so I'm an employer here, and I got a lot of young people that work for me. And I understand it because when I was young, I wasn't always looking as far forward as I should have. But, I'm going to sit down and have a meeting with all of them at the advice of one of my counselors. Most of my employees are not taking full advantage of the 401k and the match. It's like free money I'm giving them every year, and they're not taking advantage of it. So, guys in the studio, make sure you're signed up for the 401k here at our operation. But do a lot of people really miss that, especially young people?
Oh, 100%, Dave. And there's, it used to be that, well, I'm not doing it because my employer doesn't match, or I'm not doing it for whatever reasons. But again, just to have one established through a company, that's a lot of expense that you as an individual employee there don't have to worry about, coming up with. So whether they match or not, this is the best way that you can invest for success. On our website, greatlakeswealth.us, as well as anywhere else you can go on the internet, you can find calculators that if you just put in $100 a week, $400 a month, that's $4,800 a year, plus growth over time, and the eighth wonder of the world of compound interest will kick in. So there's, again, it's a simple way that you can invest for success and set yourself up for retirement and a fortune later. But if they do have a match, then that's absolutely found money that you're just missing. And 12/31 is the deadline, so you have about 5 weeks left.
Yeah, I think my employees, I think they get like a 3% match. So it's not huge, but that really adds up and makes sense. I say, look, Starbucks is great. I love their coffee. But if you could just, make coffee at home a couple days a week, that money, if you're in between 25 and 40 years old. Maybe it's too late for me, but these young people, that's going to make a big difference, isn't it? In when they get ready to retire.
Yeah, do simple math, Dave. It's the rule of 72. If you get a 7.2% return on your investments, they will double with compounding every 10 years. And if you get a 10% return on your investments with compound interest, that would double every 7.2 years. So very simple for young people. If you're 20 and you put in, the max into just a Roth IRA, forget the max in your 401k, which is over 20,000 as a max in your 401k, but the Roth at 6,000, per year for 10 years, that's 60,000, and then you'll be 30. And that 60,000, if you stop, will double in 10 years from 60,000 to 120,000. You'll be 40. From 120,000 to 240,000, you're 50. From 240,000 to 480,000, et cetera, et cetera. So that's just compounding. Forget adding the entire way. So again, I encourage greatness. And this is the opportunity of a lifetime, because the markets, no matter what market you're talking about, stocks, bonds, crypto, precious metals, real estate, they're all down this year. You're supposed to invest when investments are down.
Dewey Steffen is with us, CEO, Chief Investment Officer at Great Lakes Wealth. I wasn't planning to go here, but as long as you mentioned crypto. Is crypto dead? I mean, we've been hearing all these scary things about crypto. Is that still a hot area that people should be investing in? Do you have any thoughts?
Yes, we do for sure. We run a digital asset strategy here at Great Lakes Wealth. And so we are certainly paying attention to what's happening in the crypto markets. We think a lot of people have confused crypto with, gold, digital gold. Crypto is a speculative investment. It's more of a technology. It's not just cryptocurrency. There's blockchain. There's a whole infrastructure and utility in the digital asset space. But as it relates to cryptocurrency, we do recommend that all investors, whether they're 5 to 105, do put between 1 and 5% of their portfolio into crypto. We do not recommend anybody 5 to 105 put more than that. It is a way that you can increase your alpha, which is your excess return, but you also understand that there's huge risk. So it's a satellite investment. It's an alternative to your core, but a lot of young people, unfortunately, put the whole thing in there because they thought it was that simple and that easy. It's a technology that is here, and it is here to stay. You just have to understand it's extremely volatile, extremely high risk.
So what are you recommending for people that have been watching the markets? We've had some big days lately, but it's been a roller coaster ride. I talk to my friends, especially those that have already passed the retirement point in their life, and they're a little bit scared. It's been a challenging time. What advice do you have for people that are near or close to retirement in this current economy?
Yeah, sure. Back to the first question you asked about what to do, with all that's going on. And this is timely with it being Thanksgiving, the time of harvest and all that. Everyone has had a bad year in some part of their portfolio. If they haven't, then I'd like to talk to them and hear exactly what they've done with that one-hit wonder. But in general, this is the year where you should harvest your losses. Take a look at that, understand what that means. It means if you have investments that are down, you can sell them. And then as long as you wait 31 days to buy them back, you can realize that loss and then continue with the investment. So there are some specifics there. So we recommend you reach out to your financial advisor, your planner, to make sure that you are doing it correctly for your strategy. But harvest your losses to prepare for any future gains that you'll have. And then we would say, remind yourselves that over the long term, the stock markets have always gone up in the long term. They have always gone up. They have never not gone up. So again, realize long term that stock and other investments in that category are your friend, and they will serve you well. But in the short term, Dave, to answer your question, if you're nearing or in retirement, you need to have a short-term pile or a pile that's not invested in the markets. And guess what? Bonds are back. With the aggressive stance that the Federal Reserve has taken this year, you can now get 5%, 6% in guaranteed investments. And that is amazing considering all that's going on. So make sure you take some of your investment money and put it into those income generating, safe, stable investments generating 6%. And then besides that, have some long-term investments that are in equities, in crypto, in real estate, in other asset classes that you can very easily expect to return maybe 10%, maybe 20% per annum when things turn and go how they normally go over time.
You're taking all the doom and gloom out of this, Dewey. I know all this good news, but what you're saying makes a lot of sense. You said earlier that if we can make 7% or a little bit better on an annual basis, we're doing pretty good, and we're going to double our money over a short interval. And so, interest rates are a real pain, and inflation are a real pain as you're going to the grocery store or the gas station. But from an investment standpoint, higher interest rates, certainly that may continue to come up to discourage inflation. They may be good because on the investment side, we can actually make money. We've had very low interest rates for so long. It's been very difficult to make money with bonds, as you mentioned a moment ago.
Yeah, bonds are having a very bad year this year, and that's because when interest rates go up, bond prices do fall. And so the average bond market, the AG it's called, is down 15% year to date, 1.5. So if you have a bond market or a mutual fund of bonds, or your bonds on paper that have not matured, you may be down 15%. And guess what? That's worse than the Dow. The Dow Jones Industrial Average, the 30 largest stocks in America, is only down 8% year to date. So that's really not that bad, okay? It was down over 20% a month or so ago. So tech stocks, the S&P, other aggressive stock investments are certainly down more than 15 or 20%. Some are down 50%. Cryptocurrency is certainly down even more than that. But again, there are some stocks that are down just a little bit and they pay good dividends. But to your point, with inflation, the best way to keep up with inflation over time are equity investments. The stock market is what keeps up with inflation, because the companies that you're invested in, when they raise their prices, they pass that on to the consumer over time, which helps their revenues keep up. And so the one example is oil, and I've been using that for the last year, gas and oil. With oil prices going up, you might as well invest in some oil stocks. And that way, when you're at the pump and you're paying more, you can at least look at the pump and see the logo on there and say, well, if you can't beat them, join them. I might be paying more here, but I know I'm a shareholder and I'll get a dividend, the next quarter.
Well, see, that's why Dewey's here. I got it 100% wrong, and he was very polite not to point that out. But okay, so look at continuing to invest in the market. Dewey, anything else that you think for our community that they should be very cognizant of this time of year or any time of year with regard to investments? Anything new that you want to present today?
Well, not necessarily new, but again, this is the year of being this is the time of being thankful. It's also the time of year of generosity. And so another thing you can do before year end is help your community, help those in need. You can be charitable and you can give donations. Those will also, again, help your community, maybe help you even feel good. But you can also take a deduction on your taxes in many circumstances. So talk to your tax preparer, your accountant about that. But it is a season of thanks. It's also a season of giving. So we would encourage anyone watching today to do that. And then finally, when it comes to investing, remember, it's a long road and you can dollar cost average. You can invest with investments that pay dividends. They don't have to be the sexiest. They don't have to be the most risky out there. This is not a time to flip coins, to try to get rich quick. You'll get wealthy over time. And we appreciate your time today. And we're happy to be here. And we thank you for having the show.
Dewey, good to be with you. Thank you very much. Dewey Steffen from Great Lakes Wealth joining us here today on the Megacast. As you can see all of his information there, including information about his podcast.